Hi, everyone. I just wanted to follow up on Alex's post a few weeks ago around selling Maroo. And I think that's a conversation that many founders want to have. So I thought I was in London and I would do this in person with Alex and give you guys behind the scenes or sneak peek of Alex selling his company.
Yeah.
Welcome.
Thank you
for doing this in our office.
Of course.
Let me just give you a quick background about yourself so people who haven't read the post. So Alex is the co-founder and CEO of Maroo. It's a payments company focused on weddings, events management. And Alex has lived in London as he built the company, even though customers are in the US. So Alex, do you want to start by first telling me how's life post-acquisition?
It's good. I'm relieved. Feel relieved. There is some sort of sense of completion. Also, even taking some break and think what's next. It's always helpful. And much less stress.
Yeah,
that's
much
for
less
sure.
stress. You told me you first time went on a proper vacation after many years where you were not actually working.
Yeah. We recently went on a family vacation where I deliberately switched off the phone, and I knew that there are people behind who can really take care of stuff. And I think I told you at some point that was fun to go back and realize,
the company hasn't died.
Yeah, exactly.
Yeah. So tell us a little bit more about Maroo. What does Maroo do?
Yeah, Maroo is a business management platform for small, medium businesses in the US. Specifically, we focused on creative professionals, for example, photographers, videographers, planners. And it's kind of also linked to the origin story of the company.
Got it. And you started around COVID time, right?
I launched the company in September 2020, and we went through YC in summer 21 batch. Original idea of Maroo was basically Klarna, our firm for weddings. And we iterated on it for some time because of COVID and implications on the market from that. They didn't click as much as we hoped. So we decided to find another angle, and we launched basically first payments, and then more CRM-ish sort of angle for Maroo, where the company is basically right now. And
then it took you a couple of years to get to that point, right?
Yeah. So we had a good traction during the batch, and even after, I think we iterated for about 6 months. But then when things started opening up, and we just realized that, buy now, pay later was not as appealing in that moment. But we knew that the market will go back to norm and there'll be more appeal to this later on. So we started looking for ways how we can lower the entry barrier for our clients into Maroo universe. And that's basically why we launched payments.
And then you, over time, got about 13,000 SMBs on the platform, processing large volumes of payments every year, and the business is going well.
Yeah, business is going well. We had indeed over 13K SMBs. Total GMV was around 350 mil, getting signups pretty much every day, which, positive cash flow. So from that perspective, things are going well. Yeah, couldn't complain.
Now it's much better from a distance, everything is working well. Maybe talk a little bit about how much did you raise, on what type of instrument, how many rounds?
Yeah, we raised across 3 rounds, total amount of 4 million, all safe notes. That was a small round before YC, then right after demo day, and then a small bridge in 2023.
Got it. And after you raised the round, how did the company grow? What were some of the things you did, and what was the journey there?
Yeah, we grew quite strong, I guess, in the first couple of years. And then the growth rate kind of stalled. Not that we didn't grow enough. So 2023, we grew 92%, but it wasn't sufficient and enough for, raising, Series A.
Right.
And after that, we kind of went into more conservative, 5-10% month on month sort of growth rate.
When did you realize it could be the right time to sell, or it could be the right time to exit the company or look for options?
I think there was a external trigger. Some stuff happened around the company with some of our clients in closer to the end of 2024, and that basically triggered the whole direction in looking for acquisition.
Got it. And that was what year? And
September 2024.
Yeah. Got it. That's when you really thought, okay, maybe there's better to exit the company because markets are tough.
Yeah. Well, we had this kind of black swan event in the company, so I tried to contain it. And by the end of 2024, I pretty much realized that it will take me way longer to kind of repair the entire thing.
Sure.
And, it might be better, from the opportunity cost perspective, it might be better to find another kind of home for the company and to move on myself.
Got it. And as you started thinking about this, you started looking for options. How did you initially go about generating options for the company?
First of all, I was very transparent with my investors. So I kind of explained what happened and why. By the end of 2024, in annual investor update, I sent kind of 4 options, what I try to do with the company, which were fundraise, find external CEO, sell, or shut down. And from those options, I kind of iterated one by one, trying to, find the best outcome. And by March, pretty much like I went through 3 due diligence processes with some other companies, which unfortunately all failed. And that's when we kind of connected.
Yeah. And how did you even generate those 3 options? And like, what was that process like? What was that thinking that led to?
In my case, it was pure external outreach from me to the outside world. Plus, I asked my investors to help me with potential leads in case someone might be interested.
Got it. And when you thought about going to the external world, did you plan it a certain way? Did you reach out to competitors or complementary product companies or something like that?
Yeah, I tried to find where Maroo value proposition will fit the best way. I didn't want to go directly to competitors. So I tried to see what we have might be complementary elsewhere.
Sure.
And from that angle,
got it. And in this strategic acquisition route, because like complementary is basically strategic acquisition, who did you try to talk to? How did you reach out to them? What were those conversations like?
Well, just to kind of an example, there is a very large marketplace company in our space that everybody knows about. So I tried to reach out to their corporate development team and frankly directly to their CEO because they changed CEO recently. And I just emailed saying, hey, like maybe there's a good opportunity to restart conversation.
Got it. And you said you generated 3 potentially interested buyers and you had 1 LOI. Maybe talk about what that process was like. So in terms of starting the conversation, getting them interested, and then getting them to a point of even looking at the data room or generating an LOI.
Yeah, I think my benefit was that everybody whom I reached out to, they knew me. So there wasn't a long gap between, hey, we're interested, let's look in the data. So the step was quite quick. Yeah, I think the relationship is one of the biggest drivers in my case. But yeah, from the moment when there was certain interest expressed, it took some time to prepare data room, all the reporting, provide it to people, structure, organize it so it looks professional, and then for them to review. And yeah, that process was quite tedious and long, which not that I didn't anticipate. Everybody kept saying that it's longer, but it was longer than I even thought.
What was the time period that it took for you to generate interest, to talk to them, for them to get you?
Yeah, I mean, pretty much like those 3 months, which, somebody might say like it's quite quick, but I think like for the state where, the company was, I don't think like we were as large enough to kind of, review longer or like dig so deep because, one thing I kept really well is like all our reporting. It was quite quickly available and people were able to see the data. But yeah, it was just like different people wanted to look at the numbers, ask different questions. So it was like back and forth and, it just took some time.
Got it.
Plus, during, as you can imagine, during this time, I'm distracted. So I'm not actually trying to like solve the reasons why, like also partially I was looking to sell Maroo. So that it just kind of self-propagates.
Got it. So in these conversations with these CEOs of complementary products, help us understand how did you try to convince them to look at your company?
I think, again, somebody say like companies are not being sold, but bought.
Right.
In my case, again, I think I tried to find the same synergy. So I didn't want to push Maroo on people. Like if there was a really, complementary value proposition where, for example, platform, they had, for instance, like a marketplace, but they had no exposure to payments. That was a really cool opportunity for Maroo to step in and like, hey, this is like a prepared solution, prepared product or standalone product where we have also overlap between clients. They can benefit from it from, both platforms. That made sense for me. And, I try to show more like this sort of use cases rather than like, oh, look at this shiny thing like here and there, like we're doing this better than anyone else. Because I think it's a bit alien for me personally, like on my personality, but also I don't think people kind of jump on this sort of like.
Yeah, sometimes people are thinking that they can just run a process very quickly and they're thinking that everyone will just want to buy their company and then they'll be able to sell like for a very high price.
I think if you're so hot, like, you're just like moving with the speed of light, like most probably that will be the case. But we were not in that position. It's not like this story about like I kind of brought 10 buyers in one room and like told them you have like 30 minutes to figure out who pay the highest price. Not the case. So at the same time, I don't think it was like fire sale either.
Sure.
So I really wanted to make sure that the next buyer will understand Maroo, will kind of treat our clients the same way as we did, and like had enough strengths and experience to build better solutions and features and what our clients ask for.
Got it. And sometimes I think there is a misconception that all acquirers are looking for the same thing. Because when we are raising venture rounds, it's all the same things. Like we are telling investors the same numbers, we're telling the same story or same-ish story. There may be focus points could be different, but in acquisitions, companies are sometimes looking for different things. What was your experience?
Again, I think it's the experience with the first three companies was trying to understand what makes them tick, like where really Maroo product will come as a additional value to their existing solution. It can be either our actual product or it can be our distribution because we had a pretty large user base, whichever works. And just trying to find and understand. I think it's kind of like searching for product market fit in a way, where the acquirer really kind of has a need. And you can only figure this out once you start talking with people.
Got it. And these conversations obviously take time. It distracts you from the business. You are trying to convince people to take a look at your product in a new or different way. As you're going through this process, how are you dealing with investors? Because they may get to know about you trying to sell the company. What was that dynamic like?
Yeah. I always kind of wanted to be as transparent as I can be with my investors. So I was, during the last 4 years, I've been sending monthly investor updates, regardless when things were good or not. And basically when, our situation in September 2024 happened, so immediate investor update explaining what happened, and then weekly updates, like how I was trying to fix things. And then in December 2024, I sent this annual update when I basically said, these are 4 strategies that I'm going to go through. And if none of them works, we will need to decide what to do. And when I basically iterated on 3 and I didn't want to accept closure of the company, I basically said, hey, now I'm actively starting searching for a strategic buyer. And I think it's also was an important moment when we connected, you helped me to really understand that there is a kind of fork moment, when you basically make decision, yes, I'm selling, and you go in this kind of path and you optimizing to actually close the deal versus yes, maybe not, and so on. And, we'll see, that kind of doesn't bring anywhere, which I think was a really good kind of reality check, I would say. So yeah, investor updates, I think this is the best thing you can do, because people don't want surprises, and these things happen. If you're lucky, you have myself, professional people who understand the risks that they sign up for. So I've never had a moment with my investors, and there are quite a lot, 53 people on the cap table who were.
By the way, all of them signed. It rarely happens that 100% the investors sign the deal because some people don't care or something like that. But at the end, I think it was your communication, open communication with the investors that resulted them all signing off.
Yeah. Again, I wanted to make sure it's not somebody, didn't read my investor updates and then these news come out of the blue. I wanted to make sure that I call each and every investor because, hey, I called them in person raising money. So I didn't want to kind of part ways or finish relationship, just sending generic email saying, that's it, guys, this is the paper to sign by. I tried to set up calls with each and every one, explain what happened, answer any questions, prepare an investor FAQ, just in case people don't want to connect, they read through this and kind of give them more information for their LPs to explain, what happened with Maroo. So I think that really helped.
Yeah, open communication with investors is the key thing. I think that's sometimes when things are not going well, we start to slow down on updates and stuff like that. I've seen that quite often. As you were going through acquisition conversations with these multiple buyers, how did you keep pace with all the stuff they were asking for? And what were some surprising things for you as you were going through this process?
Well, frankly, I use ChatGPT in order to understand what's the standard structure of deal room or data room. So I pre-populated as much info as I could. I think the biggest challenge was when buyers were asking for some really custom or specific for them things, which were I can do that, but I gave already the raw data. So if you really want, you can really kind of go through this information yourself. And that's something, I really, for example, liked in our process with you is that you guys just asked me, like, give me raw data, we're going to run our analysis, and then we connected, you presented your kind of observations to validate if it's reflecting the reality or not. And for me, this was ideal because exporting raw data, it's easy, right? But then, you replicated, it helped you to understand the business first of all, but you kind of replicated some of the reporting and dashboards we already had in order to make sure that, yes, we're seeing things the same way, which also helps to kind of create an alignment.
Yeah. Sometimes it happens in acquisitions that we think that the other party will just immediately understand our business and will be, thrilled to have our company, but they're all busy in their lives. They're all busy doing their stuff. Like acquisition is not something they're thinking about day in and day out. So you have to, there are delays, like people go on vacations. You have to really push through companies to be able to convince multiple parties to be able to sell the company, right? So those things I think we sometimes miss out because investor decisions are a lot faster. Investor decisions are especially at seed stage or Series A stage, there's a partner who can diligence and then get agreement from the team and make a decision and invest like $500,000 to $5 million check. But acquisitions work the opposite way, where you have to really push. And then there's someone on the team on the acquiring side who's going to say, we can build this on our own. Why are we buying this company?
Yeah, that can happen.
Yeah.
And I guess the timing of it all, as you said, life gets in the way, so it took longer than
and then generally time kills all deals because there's something going on, and then some new guy comes in, CEO changes, the product person changes.
And I think it's also one of the good learnings. Maybe we don't cover this sometime later. You need to really be on top of that momentum. If you feel that we're kind of losing this steam, it's a moment to reach back out, ask more questions, in terms of maybe more data needed and so on. Because the moment I felt a couple of times I let them look through the data without me kind of staying on top. That's they basically churn drop. They found reasons and so on.
Got it. Yeah. And at the end of the day, like investing, selling the company, at least in similarity, is it's a momentum driven thing. You got to continue to keep them excited, which is extremely difficult in a company situation. It's when you try to sell to an enterprise client, how there is a salesperson who has to constantly work towards making that deal happen. And you are the salesperson trying to make that deal happen for your company. Now, moving on to, you had these conversations, you had an LOI, that didn't work out. Then we talked and you said you are open to selling the company. What was your acquisition experience with Helium with us, I guess, as you went through?
Very positive, overall, and I've been telling this quite a lot of folks whom I spoke already since the post. Very positive. I really like that there is a lot of YC goodwill involved on both sides because we share the same network and none of us want to screw each other up in a way that not present some data or give really poor terms. Overall, the terms of the transaction were very founder friendly. I really like the whole kind of educational aspect along the way. So because you saw a lot of companies that going through this process. So you are always transparent in terms of sharing what can happen when, what do we need to think about, sharing the resources from your legal team as well. So I don't spend the remaining cash we had, which was quite helpful. And the fact that, end-to-end process took us 3-4 weeks tops.
Yeah. And you were on vacation for one of those weeks.
Yeah.
Not a vacation.
It was right after. It was right after. So once we kind of signed and agreed, that's when I, went. I think it was very condensed. Both were staying on top. You had questions, I provided in for any questions on my end or my investors were able to address and so on. So I think again, very friendly, end-to-end, completed fast.
Yeah, I mean, in the whole process, the main thing is that I think the certainty of close is very important. Otherwise, there are many players who would, show strong interest in acquiring the company, and as they get the data, as they look at the data room or whatever, then they completely change their tune, or they don't give you an indication of whether they're going to acquire you or not. And I think one of the things that, as we were talking, is it took us a couple of weeks to give you an LOI, but I said if we give an LOI, then we are going to close the deal because by that time we are fairly confident unless some fraudulent stuff comes up, or you change your mind. At the end of the day, we want the deal happen.
But it's a good point about changing your mind. I think it's very important because I'm not going to hide. At some point, I was oh man, maybe I'm doing a mistake. it was very helpful for me to go back to that fork and like answer myself those questions, like why I even decided to go that path, like what were the underlying reasons, and those reasons have helped like to really return back to that point when it's like, oh, it's actually like now remember yourself being on your own without this kind of new acquirer like in place that you feel now kind of safe.
Yes.
Or maybe like there is a future and potential like out there. Go back to that where you were before, and trust me, like it helped me to realize these were the reasons why like this decision was made. So no regrets. Let's just move on and like close the deal.
Yeah. And that's why, like, when I especially talk to founders, I'm like, you decide what you want to make the best decision for yourselves and for the company and for your investors. And if you think that selling the company is the best decision for everyone involved, then just like commit to that path. Otherwise, you'll flip flop. And it's, as you saw, like acquirers are finicky. It takes longer to sell the company anyways, and you have to keep the momentum. So you cannot be wishy-washy. Plus, selling the company is an intense process, like takes a long time to prepare the data room.
And ultimately, I think you can, like, if you start like delaying things, you can find yourself in a worse position later on. Thinking like, oh, we'll just do X, Y, and Z and like make things better. Like you can easily get to the point where even the terms that that are actually indicated in the beginning will be worse, not because like your numbers or something wrong, but like maybe market has changed. Like OpenAI launched something new, and like your product is no longer vetted. Like things like that happen.
Seen a lot of that happen. Moving on to the next one. So you started the company, you raised money, you built the company, and now you sold the company. How has selling the company made you a better founder? Like how has it helped?
Well, I think it gives like indication or understanding of the end-to-end process or life cycle of the company from the very beginning and to the very end. Secondly, it also helps to look at the your own baby like with external eyes, because I think when we're building our companies, it's always like, I don't want to say like we're closed from the outside world, or we just have so much focus on like our little creation that's it's hard to put yourself outside and like genuinely kind of assess like, this is my product, what's its value on the market, because all those like fundraising valuations might go completely out of the window when you kind of start actually going in the market and like see what other companies will value your solution. And that's a good, I think, also reality check and like just understanding like how that works. I think just overall, I think the whole experience right now helps me for the new company just to understand like what and how I need to build in a way that's, if for example, I'm working towards a position or like strategic exit at some point, like what are the criteria? Like what are the targets? What are the structure of the products? How the documentation, tech side, code, like assets should be kind of built and so on. It's really just a good kind of learning of understanding the completeness of the whole thing. Because I think like once you're working on your startup, you never kind of think of the end of it. It's I think it's like with life. You never think like it can happen like tomorrow. And it just helps you to kind of stay organized, keep your affairs in order, like have your reporting on track, like all things kind of prepared. If something happens, like you're ready to go. And I think that really helped.
Sometimes I talk to founders, and I think many founders get to see the starting of the company. Some founders then get to see the fundraising. Then some founders get to see like building of a large company. Each of these are just separate and different skills, like being focused on a vision, convincing investors to give you money, so on and so forth. They're all separate skills. Selling a company is also a skill that very few founders learn, and it's not as openly discussed. It's like once you commit to selling, it's a different type of skill that is needed to sell the company. And I think a lot of us just like miss that skill because it's not the most common thing out there. But I think it is something that founders need to think about, or they have to shift gears from being a founder who's raising equity to grow the company to being a founder who's trying to sell the company. And I think that's a very important skill to learn. What would you share with founders who are finding themselves in the same position as you did?
The biggest lesson is start thinking about the stuff early, because just even understanding what are the options, like where your company stands, like from the perspective of external parties, how they would look at you. I would keep a list of potential acquirers just like on the side always, like see, where you can like complement someone else's product just from the, perspective of like what ifs, not necessarily just like action on it, but just kind of seeing the market and understanding it. I think one of the biggest kind of advice, and like no promotion here, but like talk to you or, Priyank, just, your team to understand like what can be done, like what are your options on the table, because you can't go with those questions to investors. They would immediately like raise alerts, flags, like why, and what are you doing? So you need to have some safe environment when you can ask those questions. And ideally, it's not ChatGPT, right? Like somebody who actually went through this whole thing.
Yeah.
So I think, as you said, like these are the topics that maybe like are not being discussed as often because it maybe not be like as glamorous skill of like, raising capital and building startups, but it's essential as well. So general recommendation, start early, just again to educate yourself. Talk to your mentors and like friends who kind of might have experience there, and just kind of have a potential list of ideas. Like if you decide to go there, like how and what you're going to do, and not necessarily to action on this, but just so you have this as a like extra playbook, plan 99 sort of thing, plan Z. In case you will need to make decisions fast.
Sure. No, I think I agree with all of those things. It's always you all thinking of like keeping a list of potential acquirers. Something is not necessarily mean you are not focused on the company, and sometimes it's like difficult to do because you just focus on thinking about success of the company. And that's what you should be focusing on 99.9999%. Maybe like 1,000% you should be just focusing on success of the company. But at some point, when you see it not working, it's okay to shift gears and then ask yourselves the question, is this the thing you want to do for the rest of your life? Like, are you still excited about the company, building this product for this market, for this customer? And if you constantly are running into, no, you're not waking up excited about building this company, maybe it's time to think about something else.
And it's actually a good point because I want to highlight this part. Like it's deciding to sell. I wouldn't see it as a sign of weakness. Like in my case, I literally tried like all possible ideas before kind of realizing that like, hey, my really last resort will be just literally shutting down the product. And I mean, that will be quite frustrating for everyone involved. So, after trying all the possible options, pivoting, like finding, extra funding, reducing the team to lower the burn, like all those options, this was like actually the last resort when I'm like, okay, I don't know what else to do. Like now I'm making this decision. And once you make it, like once you made this decision, like it shouldn't be perceived as like you gave up. I would just put this, your only alternative in this case should be like, I guess, either shutting down because you lost interest, because traction is not there, you can't fundraise, like different reasons, or, you're finding a better home for the company.
Yeah. And, at any given time, you're just trying to find the best outcome, like trying to make the best of the situation. And if acquisition is the best of the situation, like that's the answer. That's why it's a risk. Not every company, unfortunately, becomes, $100 billion company. And you should like sell this one and try to make the next one $100 billion company. So that was, I think those were all the questions. Thanks for chatting with me and taking the time coming to this makeshift YC House. We got to make something people want poster behind us. And hopefully it's helpful for founders. And if you'd like to chat, Alex obviously is happy to chat with anyone. And I'm also happy to share my thoughts if I could be helpful. Thank you, Alex.
Yeah, of course.